Hello, everyone. Welcome to Stock Talk Thursday, May 12th. Coming to you. We are looking at some interesting stuff in the market. Again, I know I say that every week, but every week it seems to get a little more interesting, a little more craziness going on. So got to update you on several things. We're going to look at what was hot and not last week. And if you remember, we had two of those not hot stocks last week. And we're going to look at what is hot and not this week. I'll tell you what, it was kind of challenging to find a hot stock for this week. The market is just so bearish right now. It's kind of crazy, but feel free to throw your comments and your questions in the comments box. Trevor, I see there. Welcome from Maryland. So fantastic. Glad to have you on. Guys, both Facebook and YouTube, I believe you should have the opportunity to throw in comments. Throw your questions in too if you got any. Love to cover those. Always happen to have a good discussion with that. So without any further ado, let's just jump right in and see what's been going on. All right, here we go. We're looking at the S&P 500. So that's the overall market. And you can see we've just been coming down pretty hard here. We had this level, actually a couple levels of, potential support. They've all been broken here. And gap down today, again, moved down a little bit, up a little bit today, but honestly, we're just getting slammed down by the 5 EMA right here. That green dashed line is the 5 EMA. And you've heard me say this before. If you're just getting pushed down by the 5 EMA, then that's not hot at all. I mean, just kind of like back in here as well. That's not a good thing. Conversely, if you're getting pushed up by the 5 EMA every single time, that's quite good. That's what you want if you have a bullish outlook. So here at Tradeway, we did call a bear market. I told you for this squirrel to get called off, what would we be looking for? We'd be looking for the support lines to get broken and us making a lower low. So in the big picture of things, you've got a high, you've got a low, you've got a lower high, and now a lower low. So we did call a bear market. But I wanted to kind of explain as well the difference between when we say bull market or bear market, squirrel market, we are trying to give our students a general idea of kind of which direction they should be looking for as far as placing their trades. When economists say a bear market, they're talking about a 20% decline from the previous high. So let's talk about that real quick here. The previous high being right up here at about 48.17. Okay, 48.17. And so if you're going to look at 20% below that, we're looking right around here, 38.55 level, somewhere in that range. Might be off just a little bit on that. But we are not far from that. We could potentially even hit that today. So today, tomorrow, you might potentially be seeing news items saying we are officially in a bear market now because we've hit that 20% below the previous high that we were at. So interesting things, do we have another recession coming up? Pretty good bear market. I know the COVID crash that was different. That was a month and done. And then we came back V recovery. And that was very different than what you saw in like 07, 08. So interesting things there. Adam, I see your comment there. Hot may be the inverse index ETFs. Yes. Yeah, actually that could be. I hadn't thought of that before. So what Adam's getting at is, guys, you can make money when the market's going down. And there's several ways you can do that. One of the ways you can do that is by buying inverse ETFs. And so basically, when the market goes down, these inverse ETFs go up. So, as not hot as the overall market is, and that's pretty not hot. I mean, again, we're almost 20% decline since the beginning of the year. As not hot as the market is, that's exactly how hot those inverse ETFs would be. So imagine if you bought inverse ETFs back here at the very beginning of the year, you'd be up nearly 20% on that investment in just 4.5 months here. So you're absolutely right, Adam. That's a good call. I should have thrown that up on here. But here's what we got for today as far. Well, actually, we're going to be looking at what was hot last week, right? So Valero was hot last week. Still pretty hot. Take a look at that. It has come down a little bit. Kind of had a little bit of a nasty day on The 9th. What was that, Monday? Yep. Yeah, so Monday kind of had a bit of a nasty day, but still held right around the 10. The 10 EMA still kind of shown to be support for right now. It's sitting right there at the 10 EMA. Wouldn't be surprised if it comes back down a little bit more. But overall, I mean, it's still pretty hot. And you look at what it did, and this is why it made the hot stock last week, right? Look at that run up in that week or two right there. So it would make sense, especially in this market right now, that there would be some profit taking. People, they make money on this run up, and then they want to take some of those profits, so they end up selling, and so then you get some of those profits taken there. And when you have more selling, the price comes down a little bit. So that is Valero. That was our hot stock for last week. DRE, Duke Realty, you can see that right up in here. You can just open and close this guy if you need. Duke Realty was our not hot stock. And last week on the 5th, we were looking at this candlestick right here, and it closed right down at this support level. So interesting day. And, the question was, is that support level going to break? Remember, we had this, if you look, let's zoom out a little bit. You look at the 1 year. There's big M happening right here, right? So if you remember me saying, if we break that low right there, we could see some pretty significant movement down. And it did break that support level, and we did move down for a couple days. And then I didn't look up the news on this to see what was going on, but I actually had a really crazy day on Tuesday where it gapped up a bunch. I mean, that's almost 20% gap up, not quite, but close to that. Gap up right there. Moved up and then came screaming down, made a lower low, in fact. This candlestick is huge. That was pretty interesting to take a look at. If we look at a 1 year chart again, look at the size of that candlestick compared to everything else in the year. This is easily, by far, the biggest candlestick of the year. And the volume shows that as well. So lots of movement happening. Didn't get a chance to research exactly what made that massive move. Then the next day, it's pretty volatile, right? Next day, open right up at that support level, moved up. Today, right back down toward that support level. So Duke Realty, quite volatile. It might still be one of our not hot stocks, but at the same time, it could be one of those that might be ready to take off. Who knows? It's that kind of volatility level with this stock right now that you just kind of want to be careful with it. Maybe just wait and see what it wants to do before we go dance with that stock. And then that bonus one that I threw in last minute last week was Amazon. This one's really showing to be a not hot stock. I mean, it had a pretty bad earnings report. They made half the profit that they were estimating, and just getting slammed down again, pushed back down by the 5 EMA. Haven't made it above the 5 EMA in a couple of weeks. Even today, made it right up to the 5 EMA and then came back down again. So that's definitely a sign that there's some weakness there. Pretty good drop. All right, but you guys want to know, well, what's hot and what's not this week, right? And again, it was a bit of a challenge to find a hot stock. Essentially, I did this right here and came back into the market. And we're looking at the last month or the last week or even today. And not as much today. That's changed now since I looked at it last. But let's look at the last week. What's the industry that's getting, in a way, crushed the least? What's getting hurt the least? And that's consumer defensive. And within there, you're going to find things like your grocery stores and just different goods that people are going to need regardless of what the economy is doing. And so come back to the chart here. Our hot stock for the day is none other than Kraft Heinz Company. So, they make all kinds of foods and everything, and they've been going up. I mean, look at this. Last 3 months so far, we've been moving up about 30% from down here, about 34, got up as high as almost 45, not quite. But overall, looking at bottom left to the top right of our screen, so making higher highs, higher lows. Definitely not the prettiest pattern out there, but there are some lines we can throw on here. Let's grab this guy right here and let's see what we got. So there's some potential right about there. You can see it catches the bodies there and catches the wicks. So that line's pretty decent right over there. If we look at a bit of a bigger time frame here, you can see the previous high is here around June of last year. So for that, I'm going to just drop a horizontal line. Just put that right about there. You can see how it catches the bodies there, and then the wick, a couple wicks right there. So even though this is a hot stock right now, it's been doing well in the last few months, even though the overall market is almost in a, legit bear market as far as the economists call it. This stock has been doing pretty well, but we are approaching this overhead potential resistance. It was resistance in the past. It's showing to be resistance again, at least for now. So we'll have to see if that resistance just keeps bogging down the stock or if it can break through that. If it does break through that resistance and continue moving up, that would just show even more of the strength that that stock has. You can see here as well 3 good earnings reports in a row. You don't even have to look at the numbers. You can just see the solid green. This is not a solid green. That's still a decent earnings report, but they didn't just blow it out of the water. It was, they were pretty close on their estimate right there. So definitely uptrending, not the cleanest pattern to work with, but I mean, as far as everything going on out there, definitely not bad. So, even though it's, we might be approaching one of those legitimate bear markets and the overall, S&P 500 is coming down and it's not looking pretty, people are still eating their mac and cheese. So that's good. All right, well, let's move on to what is not hot. And again, it's kind of a bit of a challenge when the market's so far down because, what isn't not hot? I mean, it's quite a bit going down right now, but did find one that would be interesting to look at, and that's going to be Dutch Bros. If you're not familiar with Dutch Bros, they are a coffee company. Actually started out of Oregon, which is where I come to you from every week. I live in Portland myself. Dutch Bros was started down in Grants Pass, which is going to be a few hours south of us, but Oregon-based company, and they had been, they IPO'd a few months ago. So that's the initial public offering. That's when their stock first goes live. And that can be pretty volatile times. As you can see, they moved up initially. Oh, was that the... Yeah. Okay. They moved up initially, then they came back down, and they actually traded in a range nicely for a while. But then lately here, last few weeks, they got kind of killed there. Earnings report was not very good to them. You can see they didn't miss earnings by much, honestly, just a penny there, but it was more the forecast that kind of hurt them. We all know that inflation's at record highs right now, and that is what got Dutch Bros. Their profits estimates for the upcoming quarter and in quite a while from now actually are not very good because of inflation. It's really eating into their profits. And so that's why we saw, them drop 35% overnight with that negative information. And in fact, Dutch Bros is roughly worth half of what it was since we did Stock Talk last week. So pretty big drops here. It's definitely not good for them. But what are you going to do? And inflation affects different companies in different ways, and Dutch Bros is really taking a hit there. So that is our not hot stock for the week. Guys, want to let you guys know about Step 1, Start Your Journey. If you want to learn more about what we have to offer, what we have to teach, let me do this right here real quick. There we go. Trayway.com/events-page. That's where you can go to register for Step 1, Start Your Journey. That's going to happen tomorrow and Saturday. So this weekend, tomorrow and Saturday, full 2 days of education for you, learning all about stock trading, talking about some of these same patterns that we've been looking at today. So wanted to bring that to your attention. Also, Charts by Tradeway training. You can see the platform that I've been using for the last several months on Stock Talk Thursday is all charts by Tradeway. So if you want to learn more about that and even get some training on the platform, same thing, go to tradeway.com, the events page there, and you can register for the training. So that's going to wrap it up for today for Stock Talk Thursday. We'll see you guys next week, and we'll see what's going on then.